Hello and welcome to an all-new episode of Perspective right here on the CryptoCast Network. Thank you guys so much for joining us again. It is a beautiful, beautiful day, and I hope it's beautiful wherever you guys are as well. We are, of course, sharing our website here, the CryptoCast.network, where you'll be able to find the YouTube, Twitter, Instagram, iTunes, and RSS feed, and we really appreciate it if you guys could give us a thumbs up. If you guys like the show, if you guys are new, hit the subscribe button. And if you're an audio listener, we would really appreciate if you guys could give us a review on iTunes. And we, of course, on the website have our merchandise, some shirts for sale, the Bitcoin news shirt and Crypto Cash shirt and all that good stuff. You guys can check that out if you want to support the channel. And of course, as always, we are displaying our QR code at the bottom for donations because this is a community-supported YouTube channel. And we thank you guys so much for your donations. We really, really appreciate it. We got a couple new ones yesterday. So again, guys, thank you so much. And we are still doing the programmingwithbitcoin.com interactive 2-day workshop where we'll be teaching C# developers how to work with Bitcoin. That'll be taught by both myself and the creator of the NBitcoin library, Nicola Doye. We're going to be trying to take that around the country. So for right now, we're going to be going to San Francisco, October 13th, and Seattle, November 3rd. So with that aside, let's stop the screen share and introduce the panelists. Ladies and gentlemen, I'm super proud to bring you guys today a couple of people that that wrote an article, and I want to get into it a little bit more. This is, of course, the show Perspective, where we do interview writers in the space about their latest articles, and I'm just really excited to get into it. So let's introduce our guests. First, we have Mr. Gary Basin. Gary, how you doing?
I'm doing well.
Nice to have you here, man. Really appreciate you coming on. And then we have Mr. Taylor Pearson. Taylor, how you doing?
I'm good. Glad to be here. This will be fun.
Yeah, man, I'm really glad to get into it. You guys wrote this article that I think is awesome and fantastic. So I wanted to do a show about it and get into it, dive into it a little bit more, try to get a little bit more information for the viewers. But first, let's just ask you a couple quick questions about the article. So first, Gary, let me just ask you first. What drove you guys to create this article? What was the idea behind creating it, and how long have you guys been creating articles like this? We'll ask Gary first.
Yeah, so I spent about 3 or 4 months this year full time just exploring the crypto space, starting from looking for projects to build, and then slowly transitioned towards looking at it as an investment vehicle, and started working with my friend Taylor for a few months of that. And a lot of the things we're batting around was how people were valuing these assets. And that culminated in kind of exploring the different models that people had popularized, and like doing kind of like a pro-con analysis of which ones make sense and which ones don't, and why.
Very, very cool. All right, let's ask Taylor. Taylor, what was the reason you got into it? Just real quick, so the viewers are aware. Gary actually wrote most of the valuation and exposure stuff, and Taylor wrote most of the technology and regulation stuff. So Taylor, what drove you to write this article, and how long have you been writing articles in the space?
Yes, I've been writing articles in the space for a couple of years now. I guess this article, I think one sort of, it would call it State of Bitcoin. There's a lot of stuff going on, and so I think the sort of overview format works kind of nice for this space. If you're not reading all the news stories that are breaking every day, but you still want to sort of have like a quarterly or monthly update of like, here are the sort of major goings on. And then, yeah, I think we felt like there was a bit of like a hole in terms of just the research in the space. There wasn't sort of a product like this or an article like this, and it was something that, like, I think both of us personally would want to see, something like a monthly or quarterly, like these are the big things going on.
Very, very cool. Yeah, this is great. I mean, there are a couple newsletters out there, like the Bitcoin Optech newsletter, but of course that gets a little bit more technical on what's going on. So this seems to be a great overview of everything that's going on right now. This just to break down this article, it is separated into basically valuation, technology, regulation, legal, and let's see here, and of course, yeah, the technology, and yeah, so that's pretty much everything. Getting exposure, of course. So I want to break down. I want to go into this article a little bit. So first, let's ask Gary here. Maybe you can give us a little information about starting off right away with a bit of the overview of the valuation part of the article.
Sure. So we kind of took the position of let's take the different metrics that we've seen people write about in the space, and just break down how they work, why they they might be useful, and like kind of where they go wrong. So there's a couple metrics that are looking directly at the network value itself. So NVT and NVM, which are kind of looking at, so specifically from the Bitcoin's perspective, it would be like the network value is the price of Bitcoin times the number of coins out there. So kind of like the market cap effectively. And it's then in the NVT and NVM, we're dividing by different things and kind of seeing if that has any predictive power on, is the market overvalued or undervalued. And then below those, we kind of look into kind of more sentiment-oriented indicators. So there's like comparing Bitcoin to altcoins. So that's kind of, there's no clear like sense of whether it would be oversold or undersold, or oversold or overbought. It's more of like, what's your thesis about how value will accrue between these different coins? So tracking that is an interesting metric. And then more directly sentiment-oriented measures, like the degree to which you have people taking leverage long versus short positions, or different measures of volatility, or like the positioning of different types of traders, for example, in the futures market.
All right, very interesting. So it does look like that you say in your article that we really are in a stone age almost for valuation tools, right? This is early days, still trying to figure out all of these different ways to evaluate and understand Bitcoin. And you did mention a couple of the indicators that you guys use, which was NVT and NVM, really, really great indicators. NVT is one that I really like. That's by, of course, Willy Woo, who is featured, whose information is featured in this article. I really like that. It's interesting that nearly all of the indicators you say suggest that the bear market will last of 2018, that it will last at least a few more months. Any additional information or any additional color you want to give on that?
I mean, yeah, other than the caveat that I'm not super confident that these measures are necessarily all that relevant to pricing something like Bitcoin. If you do kind of assume that, okay, like let's take it for what they are, and this is kind of what we have to work with, then yeah, I mean, relative to where these things have been historically, it seems like we're at still pretty high levels. So there's no way to measure it in terms of time necessarily, but given where price is now and where the network usage is now, measured different ways, seems to be quite overvalued.
Sure. Yeah. So, and again, you guys go into a couple different things in here. You guys talk about the dominance indicator, you guys talk about the longs and the shorts, and then, of course, a little bit even into the institutional investment. So let's see here. So basically, according to all these indicators, it does look like we're still, in a bear market for a while. There's a lot of information here based on these cycles. I really, again, have the links, of course, to this article and everything else, and of course, both these guys in the show notes. So, guys, make sure you check that out. Let's see here. Beyond the valuation, is there anything else that you want to describe a little bit before we go into the next section of the article?
Well, so the one interesting thing is some of these sentiment indicators are much more shorter term oriented, since you're looking at more direct measures of like what positions people are taking, and that can change very quickly. So something like that could switch from bullish to bearish within a few weeks or a few days, whereas these kind of lower frequency measures that are looking at number of active addresses or amount of transaction volume hitting the network, that tends to change much more slowly. So you would expect those to be kind of like more gradually updating.
Absolutely, absolutely. So very interesting. Again, to recap, most of these indicators are kind of short term, and most of the sentiment stuff for sure is short term. At least most of the sentiment stuff. But some of these indicators, we can't, of course, predict the future or anything. But these indicators do a pretty good job of kind of telling us where we are in Bitcoin cycles, since they do tend to repeat very similarly over time. So let's move into the technology section now. Maybe let's ask Taylor a little bit about this. So, you guys go into a lot of the stuff here. You guys go into the transaction fees, SegWit, all sorts of good stuff in here. So we're going to get into that. Maybe you can just give us a little bit of a overview, Taylor, of the technology before we can kind of go into it section by section.
Sure. So looked one, just sort of like the current state of the supply schedule. At the current block reward, the annual inflation for Bitcoin is 4.12%. So still not high, but certainly higher than the inflation of the US dollar right now. Losing the Lightning Network and the network usage, sort of the TLDR would be just still very, very young and developing. And then looked at SegWit adoption, which has gone up pretty significantly over the last year. And then, as you would sort of expect, transaction fees have come down in part because of SegWit, but also probably more than that, just decreased network usage. Value to transaction or value to max off ratio. You can see there's a lot less value being transacted, a lot less active users than when the fees spiked in sort of December, January.
Sure, yeah, that's definitely a big part of it. It's part of the fees going down, of course, is less activity. That's a big part of it. But it's really, really important to understand the technology that went into making that happen as well, right? So mainly SegWit, and of course, people batching their transactions. Big companies like Coinbase, right? Blockchain.info. Some of these larger companies that do a lot of transactions. What really helped the network out a lot was the batching. Is that correct?
I'm not a huge expert in that. I would probably defer to some more technical. That's my understanding, but I couldn't say like to what extent it's driven by SegWit as opposed to just the decreased transaction usage.
Sure, gotcha. Okay, well, before we go into any more technology, I actually do want to go back to Gary for 1 second here, because there was one section we missed here in the valuation. Gary, maybe you can talk a little bit more about the institutional investment part, because you guys do go into a little bit of the CBOE and the CME. Maybe you can just talk a little bit about that as far as the state of Bitcoin goes.
Sure. Well, from a valuation perspective, I'm not sure how useful it is, because as you can so I guess to give a quick overview, the futures markets, the regulators require the exchanges to publish kind of these broad reports on who has what positions, and they break down into categories. Kind of the way that these categories are broken out, they tend to be separated into large speculators versus small speculators versus like commercial hedgers. And basically, anyone who's trading kind of through an interactive broker's account or some other kind of retail platform for accessing futures, they're hitting the small speculator category. And the idea is that small speculators just tend to be wrong. And when people look at commitment of traders reports, they're kind of trying to see how small speculators are positioned and kind of assume that the market's going to go the other way. Now, with something like this, Bitcoin's a little bit weird because it's very hard to trade. It's very hard to short. The futures market is basically one of the only ways of doing that, and it's being shorted by kind of a lot of the shorting demands coming from professional traders. So people making markets, running dealer desks, things like that. They need to short to hedge. So I think what you're seeing is that the large speculators are just like permanently short, like a lot. As much as they can probably in the futures market, and then that's offset by whoever, which in this case would be small speculators mostly. So you kind of see that fluctuating, like in the last value in that chart has large speculators short 1472 contracts, which is, I think this is in contracts, so that would be like 7,000 Bitcoin or something. But you kind of see how it's remained negative, between 1,000 and 2,000 since the market existed. So the fact that it's not really doing much might indicate that it's not going to be very useful for making predictions. But it's still interesting to look at. As you get ETFs and the market matures, you'll probably see this move around more. It might even, the numbers will flip. You might see like large speculators be net long, things like that. And then it might be a more useful tool.
All right, makes sense. So just to wrap up this section again, it does look like it's a bit early days for these indicators. We're still figuring indicators out, like the NVT. That is a pretty new one, So we're still getting into that. And again, basically, most of the sentiment right now is that we're going to be in the bear market for a few more months. So okay, so very interesting, Gary. Let's go back to Taylor for the technology here, and maybe you can let's see. So we went over. Maybe you can go over a little bit about the hash rate right now, because we're seeing just kind of enormous percentages of that. What are we? What is the percentages that we are up to date? And do you see that continuing?
Yeah, so it's up around 300% per. Excuse me. Historically, hash rate's grown around 300% per year, with sort of a fairly large amount of variance year to year. Year to date, it is up at least that much. I think it's up even more, like 350 or 40%, and we're still in September. So I guess my impression of what we've seen is we had the big price increase, price run up last year. There's a pretty significant lag time from sort of, I want to start a mining operation to when that hash rate is actually coming up on the network. So I think most of what we've seen this year is sort of the reaction to that price increase and increased capacity from players already in the space, and then also new entrants. So I think a tough market as a miner. You've seen the price has come down a lot. Looks like it's going to stay down, for at least a little while. And way more hash rate coming online, but also very good for Bitcoin users in a lot of way, that the network is that much more secure.
Yeah, so it does look like the hash rate is going insane. It's definitely climbing, and that's a great way to to evaluate Bitcoin, or at least one of the great ways to evaluate Bitcoin, because it does take obviously electricity to create Bitcoin, and so we can at least say that if there's a base amount that it costs to create Bitcoin, then obviously the price has to at least try to find equilibrium around that. So that makes sense. You did say talk a little bit about Lightning in here. Maybe you can give us a little bit more detail on some of the information you gave us about Lightning as measuring it as a way to measure Bitcoin's value.
Yeah, so I guess a lot of talk over the course of the year, I guess particularly the last few months, about Lightning and sort of the future of the second layer network. So there's a great bitcoinvisuals.com has some good data, some good graphs on sort of the state of the Lightning network. So we went in and looked at that a little bit. I think the network itself is still very much like mostly sort of like a testing thing. There's a good case study we talked about in there. Someone did of sort of setting up and running a Lightning node, and I think they put like 40 Bitcoin in there or something, which this was like July or August, would have been like by far the largest Lightning node. And sort of he was reflecting on like how difficult is it to run a 40 Bitcoin, a Lightning node, and it's still pretty difficult. Lots of trouble like getting it to stay in sync and online and everything. So yeah, I think there seems to be pretty significant growth, and if the sort of current growth rate stays at what it is, in a couple of years from now, you could see the pretty significant size network, but we're still very much in the very, very early stages. So we'll have to see, is this sort of the beginning stages of a very sharp ramp up, or is it just sort of the testing period?
Sure. And finally, to close out the technology section, maybe you can just tell us a little bit about some of the short-term fungibility concerns you have on there. Because I definitely, I know that privacy is a big talk of the town right now in Bitcoin. So maybe you can just tell us a little bit about what you wrote in the article there.
Yeah, so I think when you look at, this is maybe a little bit longer term, some of the biggest concerns around Bitcoin's viability as a store of value, as a form of money. One of the big ones now is fungibility, that because the entire history of the Bitcoin network is public, There are companies like Chainalysis. I know of a couple others that are trying to come out with, something akin to like rating systems, something like there's an A Bitcoin and a B, grade B Bitcoin, grade C Bitcoin. And so then that starts to look not so fungible. That, is there going to be a separate market for an A Bitcoin, or a separate price for A Bitcoin than a B Bitcoin than a C Bitcoin? And so I think there's not, at least as far as I know, there's not a lot of great answers to how to deal with that, how to add privacy. I think there's sort of some increased capacity as Lightning becomes more popular. That sort of enhances some of the privacy aspects of the network. But figuring out, to what extent is that going to matter? In 3 years, are people going to refuse to use Bitcoin? Or is the demand going to be much less because it's not as fungible as it's probably broadly perceived right now? Or does that really matter? And I think it's very unclear at this point. I think very little of the market that's trading this stuff has thought super deeply about how to price the fungibility or lack thereof.
Yeah, it's really interesting because this is definitely a big concern, right? This is a big concern among Bitcoiners, among the ecosystem of fungibility going forward into the future. And I think that because it's such an imperative thing, it's such an important and just obvious thing that we need to fix, that there's just a huge amount right now of people working on that. I'm not sure if you're familiar with, but there is a bunch of people working on things like Schnorr signatures to be able to gain privacy and efficiency there. Of course, we have the Lightning Network, which is privacy by default, right? So that is not only an order of magnitude scaling solution that Bitcoin needs to really win, but it also is a privacy win, because again, at that layer 2, it is privacy by default. So we do have some amazing things, I think, coming down the line that's going to solve that fungibility problem long term. But I do think that it is absolutely an issue short term right now. So yeah, so that's a great point. I did want to close that up with that, but there was one more thing I wanted to mention that I saw you guys on here, or that Taylor, you said. One more thing I saw that you wrote on here, which is that, even with fees and tens of dollars or hundreds of dollars, even if fees can get up there like that, actually, because again, nobody's advocating for high fees just before the BCH people get all crazy. But even if we did have high fees, it says here that you still believe that, Bitcoin can still serve as like a sovereign level censorship resistant, store of value. And even Safety in his book, The Bitcoin Standard, says that even if fees were like $100 to $1,000, Bitcoin could still act like a central bank, like a far, far, far better version, right, of a central bank that we have now, a community-owned almost central bank, because anybody who owns a bit of Bitcoin would almost own sort of stake in that, right? So what are your thoughts on that, about the transaction fees kind of maybe slowing down Bitcoin's adoption, or not slowing down Bitcoin's adoption?
Yeah,
or how it relates to the valuation. Sorry, go ahead.
Sure. Yeah, I think Bitcoin is sort of unique, or fairly unique among sort of other cryptocurrencies, in that there doesn't, a lot of the valuations, I think, or people that are investing in these things are sort of doing that based on, potential future technological developments. Whereas, Bitcoin as it exists now, I think the fungibility concern, like we talked about, is a large one. I think probably the second, major thing that people are concerned about that we'll have to get addressed at some point is mining rewards as those decline, and whether you can still secure the network with just fees or highly reduced mining rewards. But sort of absent those two things, and I think those are both, they're not immediate. They're concerns, but they're not immediate concerns. They're not concerns in a month from now, most likely. Bitcoin kind of already works, right? Like if what you're using or what you're trying to do is use some form of digital gold, and there's the gold market is $6 trillion. There's a lot of people that think gold is valuable as a form of money. The estimates sort of vary. I've talked to a couple of my friends that work in the gold industry, and something like 50 to 70% of their market cap of gold is probably a monetary premium, above its sort of industrial uses in manufacturing or jewelry or whatever. So if what you just want to use is sort of a censorship-resistant store of wealth, technologically, Bitcoin already works for that. And if you compare to sending, if you have $100,000 in gold and you live in Singapore and you want to send that to someone in California, that's still going to be far, far, far more expensive and prone to censorship than, say, sending that person, the equivalent. in Bitcoin. So I think, from that case, to the extent that use case is sort of the one driving the adoption and the valuation, and I think, probably behind just speculation, that probably is the biggest driver, the biggest use case. The current technology that exists in Bitcoin is plenty good, or sufficient to sort of accomplish that.
Really interesting how people like underestimate good enough. Technology that's good enough to actually span when it comes to these network effects, like we've seen with the internet. It just needs to be good enough with TCP/IP, the protocol, right? Like there was actually some, X27, there was some big protocols invented by the big telecom companies that was probably a little bit better than TCP/IP, right? But TCP/IP was good enough. And I think that's what we have with Bitcoin, even in the privacy sector, where we're going to make Bitcoin privacy good enough. We're not going to make it default on chain itself, maybe at the application layer and additional layers above that, but it's good enough to be able to scale to the world. And that's what's really important, is that, things don't have to be perfect, but they just have to be good enough. And I think people underestimate that because, with all of this craze of all these other coins talking about just throughput capacity and things like that, like just these single-minded things, it's just important to remember, I think, that things just need to be good enough, right, in order to, when it comes to open source. Do you have any comments on that?
No, I think that's right. At least that makes sense to me. If you look back at, I'm trying to remember all the stories, but a lot of the same things were said about Linux. There's a lot of things that are inefficient. And actually, one of the articles that really attracted me to Bitcoin initially was by a researcher named Gwern. And his article is "Bitcoin is worse is better." And so there's a phrase, and I can't remember who coined it, but it was an open source movement phrase called "worse is better," that a lot of these things, which looked like a mess sort of aesthetically, ended up actually being effective. And so, there's a lot of things about Bitcoin that you'd say, work in practice better than in theory. But like in theory, it should be it looks like a disaster, but in practice, it seems to work out quite well. And so I think there seems to be some sort of, unique property to Bitcoin that is that worse is better paradigm.
Great. Yeah, it's really interesting. It's baffles the mind a little bit. It's nonsensical almost, but it ends up working. It ends up being the truth. There's a lot of things that think there's a lot of things that you think won't work in practice, but actually does. And it gets kind of crazy when it comes to these networks, because they can have these network effects and really kind of go crazy. So very, very cool. I think we can wrap up that section. Okay, so now let's see here. I think, Taylor, we should talk a little bit now about the regulation section. That is the next section. And then finally, after that, will be the getting more exposure to Bitcoin section, which we'll be talking to Gary again about. But first, Taylor, maybe you can start us off here on the regulation section. How is that looking for the state of Bitcoin for 2018 and for fall of 2018?
So sort of overall, I think in the same way with technology, Bitcoin is probably sort of the least uncertain in terms of the regulatory picture. It's pretty clear. In 2015, the CMC ruled that Bitcoin was a commodity and it was going to be regulated under that purview. That was upheld in March of this year by a district judge. And so it seems pretty clear that it doesn't seem to be compared with all sort of the other cryptocurrencies, crypto assets, nearly the same amount of regulatory uncertainty. We did see the Winklevoss Bitcoin ETF was rejected. It wasn't clear. It seemed like a lot of that rejection was based on the particular way that ETF was structured. It was very dependent upon using the price on Gemini's exchange, which the regulator sort of felt would be a little bit too manipulative. If that had been based on a market with more volume and liquidity, that might have altered sort of how they looked at it. I guess the other headlines on sort of the regulatory front that were interesting to me, one is just sort of this regulatory arbitrage. The crypto industry is interesting and
well, sorry, real quick, Taylor. Sorry, before we get into the regulatory arbitrage, yeah. So just to recap real quick about so the so far those ETFs, they haven't been approved yet, but you say it's mostly due to the fact that it was like the way that the ETF was structured. I mean, it was kind of too much risk there. So I think that that was an important thing to understand. And it also says that you basically say that at this point, Bitcoin's regulatory, regulation is basically black and white, right? It's just a commodity. Is that right?
Yeah, I would say if you were to compare it to every other, crypto asset, it is by far the most black and white. It's probably less black and white than, if you're going to regulate corn futures or something that's been around for 50 or 100 years. But it seems pretty clear that it's going to be treated as a commodity by the regulators. And I think in terms of going back to the valuation piece, a lot of the talk regarding, potential big catalysts for the valuation is around sort of institutional money coming into the space. And so it seems clear, or seems fairly clear that, if that money is going to come into space, Bitcoin is sort of the most logical place. And I think a large part of that is because, there's just less regulatory uncertainty. They're not worried they're going to be buying an unregistered security. They know what they're buying is a commodity.
Yep, makes sense there. Yeah, sorry about that. I forgot to mute when I was typing there. Usually I remember to do that. So that makes a lot of sense there. And this is early days. It's still going to take a while for us to fully, flesh this out. But it does look like, for the most part, that again the regulatory, the regulation around Bitcoin is pretty black and white right now. It is just basically a commodity. There's not a whole lot of confusion around regulation with Bitcoin. Really, most of the confusion when it comes to regulation, I think, falls around the other coins, like, for example, EOS or specifically Ethereum, whether it's a security or not. So that's very interesting. Let's go to the regulatory arbitrage then. I believe you have a section on this. Let's get into that a little bit, Taylor. Go ahead.
Yes, I guess for crypto is unique and interesting in that, the ability to do regulatory arbitrage seems much higher, sort of given the censorship resistant aspects of the space. So some of the big headlines from the last few months were one, Binance sort of shifting to Malta, and almost seemed like Malta was sort of crafting some legislation around what would make sense for Binance and other crypto companies. So I think sort of given how these companies, you look at Binance and you compare it to sort of a more traditional industrial age company like a car factory. Ford can't pick up its factories and move to Malta because the regulatory situation is more friendly. But if you're running mostly a software company, you're running something like an exchange, moving your headquarters to Malta is by comparison a lot more feasible. So I think that's with some ups and downs, that's probably a long-term trend that we're going to see continue. The other city that gets brought up a lot in sort of the regulatory arbitrage discussion is Zug, Switzerland. Gibraltar also appears to be trying to figure out some sort of regulatory fableness. So we'll see. We'll see how those sort of play out in terms of how maybe U.S. and European regulators start to look at companies that have done that. But at least for the time being, it seems like there is kind of a clear regulatory arbitrage there, and companies are taking advantage of it.
Yep. Yeah, we're seeing a lot of stuff like that. We're seeing a lot of companies move to where the regulation is favorable. And I think that this is going to increase, just like you say in the article, there is a whole lot of people on the other side of the bet that think that crypto will work, right? So there's a whole, despite some of the light touch regulation we've seen, it's still tons of KYC, right? There's still tons of KYC and AML out there where I think there's going to be huge amounts of demand for the other side of that bet, for people who don't want KYC. And again, people are going to go where the regulation is most friendly. And I think that this is going to be a huge thing going forward. There's going to be country after country, I think, that will fall in line and eventually just create the situations that are very, very good for crypto companies. I think they're going to invite them in. I think they're going to welcome them. It's going to take some time. But again, some of these countries can see the upside. The upside is absolutely massive. And so I think that eventually, more and more countries will wake up. It's almost just like Andreas used to say, right? It's going to be a few people at first, and then the herd, eventually comes around. So really interesting stuff. Taylor, let's just talk about, I think, the last part of this section, which is the international regulatory bodies seem to remain pretty friendly.
Yeah, so you mentioned the Bitcoin standard. There's some talk about within the Bitcoin community, how people are wondering, how are sort of these traditional financial institutions, these institutions like the Fed or the IMF, the G20 Financial Stability Board, how do they sort of view Bitcoin? My sense is they sort of see it as, I think the internet analogy is probably what they're drawing from it. Oh, this is a new technology and it could potentially enable some new innovation. It's not, there doesn't seem to be any sort of systemic risk. There's not a lot of concern that, a crash in Bitcoin is going to lead to a crash in broader financial markets, that the market is down, 75, 80% from, I guess Bitcoin's down less, maybe 50 or 60% from its all-time highs. And doesn't seem
I think it's more like, I think it's a bit more like 70%, 75% plus from the all-time highs. Yeah. Sorry, go ahead.
But to your point, it's down 70%. It doesn't, it's affected sort of the other crypto tokens, but there's no other markets that it's spread into. And so I think that's when those people are looking at it, at least given sort of the current state of the ecosystem, they just want to make sure there's no sort of contagion effect like we saw in the 2008 global financial crisis with real estate. And by all appearances, there isn't. I think it'll be interesting, if and when Bitcoin is, an order of magnitude larger in terms of users and market capitalization, what will these sort of regulatory bodies start to think about them? Because that's probably the point at which you start thinking about Bitcoin is a meaningful percentage of the gold market. It starts to look less maybe like an innovative technology and more like sort of a competing currency. But we'll see how their views change over time. I'm interested to see that evolve.
Absolutely, man. It's going to be, I think we're all interested. It's going to be pretty crazy to see how the regulation plays out around the world, because everybody's going to, do something a little bit different, right? Everybody's going to slightly change it. And so we're going to see overall what people are going to do. And like you say, so far, for the most part, it's pretty neutral. It's not necessarily super positive around the whole world or anything like that, but it's certainly neutral. People are just applying KYC AML for most of the crypto companies out there, but still allowing them to function. So again, it's pretty neutral for the most part, but I think we're gonna hit this huge wall of the fact that Bitcoin can't be controlled. So they're eventually, I think everybody, whether you're a regulator, whether you're a hedge fund manager, you're eventually going to figure out that Bitcoin can't be controlled. So I think it's going to be a little bit more difficult to regulate than most people understand. But again, it doesn't really quite matter, right? Because Bitcoin's going to continue being Bitcoin. You're still going to be able to create transactions. You're still going to be able to route value. All of this in a permissionless way. You won't have to, worry about too much of this. Because again, Bitcoin is stateless, right? It's countryless. It doesn't care about borders. It doesn't care about any specific regulations. It will continue to just work as long as the internet works. But even then, of course, we have stuff from Blockstream, right? Like coming down the satellite, and we have mesh networks. There's always a way, guys. There's always a way. So great points. We'll end that section there, Taylor, and go back to Mr. Gary Basin here to talk a little bit more about the final section of the article, which is different ways of getting exposure to Bitcoin. So Gary, maybe you can just give us a brief description of that, and then we'll get into it.
Yeah, so we kind of wanted to cover the different ways that people can get exposed to Bitcoin. I know, speaking for myself, and I think Taylor as well, like, we both own Bitcoin. We're bullish on Bitcoin long term, and we want to own our own coin, so we manage our own keys. But that's not going to be everybody. I think we could easily end up in a world where the majority of people aren't managing their own keys, aren't holding their own coin, but are still getting exposure to Bitcoin somehow. So there's a variety of ways that this can happen. Most of them, like, you're not custodying the coin, so it's going to be through some kind of fund, whether it's publicly available or private. So the public options, one of them already exists. It's been around for a little over a year. There's a closed-end fund called Grayscale's Bitcoin Investment Trust, GBTC. A lot of people are familiar with exchange-traded funds, ETFs. A closed-end fund is kind of like an ETF, except it doesn't get to update its holdings. So with an ETF, you can create and redeem the underlying assets for shares. So that kind of keeps the pricing in check with the underlying asset. Whereas with a closed-end fund, there's no the process for actually creating or redeeming the shares is like non-existent or quite difficult. So what you end up seeing is often they trade at not at the value of the underlying asset, and that's what you see with this specific closed-end fund. So I would, this is a thing that probably you may not want to own just because it trades at such a high premium. I mean, this is obviously not financial advice, but just looking at the numbers, if you look at over the past year's performance, Bitcoin itself is still up over 50% over the past year, whereas this closed-end fund itself is actually down about 1%, and that's just from the NAV premium collapsing. It's still there. I think it's like around a 20 or 25% premium still. So it's a little bit more of a more dangerous way of holding the exposure. Then getting to the more traditional route that people are interested in, which is ETFs. Taylor spoke a little bit about that. There isn't one approved yet. I think there was a product from Sweden. I don't remember if it was an ETF or not, that snuck onto U.S. exchanges briefly, and then the SEC took it down pretty quickly. So I think still we can say that there's no ETF yet that you can access. When that happens, I think that'll be pretty good in terms of getting people access to Bitcoin in a relatively safe way. ETFs have this nice property of, in general, they're gonna track the price of the underlying asset because of the way that the mechanism works. Now, this doesn't eliminate all risk. I'm kind of curious to see how they handle the custody and whether it's insured. I expect that it won't be insured because it's probably really expensive to do so, which means that if it's not insured, then it's possible that the custodian of the coin for the ETF could, face cybersecurity risk. If they lose the coin, then, the value of the ETF is at risk as well. But these are kind of all open questions depending on what gets approved eventually. So yeah, I think for most people, if they want exposure through kind of a simple turnkey route and aren't prepared to take on kind of risks that they might not understand, then waiting for an ETF is probably the safest route. There are some publicly listed equities that do give you indirect exposure to crypto. So this is kind of like the publicly listed miners and chip manufacturers. Miners would be the mining companies that are mining the coin that have gone public, and the chip manufacturers are, of course, these graphics card companies and kind of upstream chip providers that are being used by the miners themselves. And this does give you some exposure to Bitcoin, but it's pretty indirect. The profitability of mining is kind of separate from the price of Bitcoin. Bitcoin could stay steady or go up, and the miners could still suffer. And same for the chip manufacturers. It's even more further removed from the price of Bitcoin. But of course, you do have the benefit of these being publicly traded securities. You can look at their their balance sheet and their income statement, and there's audited financials, so you can kind of do your own analysis and determine whether it's a company that you want to own. But of course, it's not Bitcoin itself. And then finally, you have the private vehicles. So these are basically hedge funds or variations of that structure. There's a kind of a laundry list of them out there. The fees vary. Some of them are relatively low, around the 2% per year mark. And here you're basically just trusting a fund to buy the coin and hold it for you and do what they say, either using an external custodian or custodying themselves. So this is really like, first, it's only available to accredited investors in the US, which means you have a minimum net worth or income requirement. And the reason for that is basically there's very little oversight about how these funds work and what they're doing. So it's really up to you to evaluate like their approach. Like, you know, if they're custodying themselves, it's up to you to evaluate, are there OPSEC procedures in place? Do they make sense? Are there alternative risks that, you know, that you are exposed to that you hadn't thought of before? All kinds of stuff like capital lockups, fees that are non-standard, all kinds of stuff can come up with these funds. So you definitely need to do a lot of research when you're getting into them. And that's even more so for the actively managed funds. So these are the kind of the ones that are not just holding Bitcoin, but they're, you know, making trades. They're trying to predict direction, or they're trading altcoins. And it's a little bit more indirect exposure to Bitcoin, obviously, because they're doing all kinds of stuff rather than just holding Bitcoin. And you have even more reliance on your ability to kind of pick winners in this case. And then we kind of do a overview of the custody options out there. So if you're not holding your own coin, you're a large holder, you have the option of going to some of these institutions that have products like Coinbase Custody. There's a few in the pipeline from bigger banks, Northern Trust, and I believe Goldman. You see more and more of these being announced every few weeks almost now. And the idea is that you're going to pay them some annual fee, and they're gonna hold your coin for you in cold storage. As far as I know, I don't think they're insuring it, so they could, in theory, lose it, but don't quote me on that. I think obviously because of the unique risks involved with something like a private key, it's very, very expensive to insure, and that could be a long-term problem for some of these institutional custodians, especially if one of them actually gets hacked and people realize how big the risk actually is. Finally, you have, our preferred option, which is personal custody. Buy the coins on an exchange, custody them yourself. So where you buy them, pretty straightforward. I mean, I use Coinbase or Coinbase Pro. It's pretty easy to use. You buy the coin, but we're big proponents of holding your own coin, which means you don't want to keep them on the exchange. You're gonna have to transfer to a wallet, ideally a hardware wallet. If you're not ready for that, or if that seems like it's not worth it, or kind of too daunting, realistically, holding it on an exchange is not nearly as risky as it used to be. So, I've heard a lot of people in the space telling newcomers, buy your coin and hold it on Coinbase or Poloniex. These are well-capitalized companies. The odds of them having a complete hack is pretty low, and if they have a partial hack, they're probably going to reimburse you. I mean, you're definitely taking some risk there, but it might be better than setting up your own hardware wallet and either losing your seed phrase or exposing it online accidentally and getting it completely stolen with no recourse, and nowhere to even start looking for them. So kind of the double-edged sword of a hardware wallet. It's obviously your key is your coin, but if you mess up holding those keys, then there's no going back from that.
Yeah, that's for sure. If you lose your coins, that's about it. As we like to say, guys, if it's not your keys, it's not your Bitcoin. So there was a bunch of stuff in there. So, just to quickly recap, there was a bunch of different ways to get exposure to Bitcoin, that was mentioned, both the non-custodial ways, the publicly listed ways, like options and things like that. And then the accredited investor ways as well, like hedge funds and ETFs and things like that. And of course, even mentioned a way to get exposure would be to invest into mining companies. That's of course another way. It's an interesting way to get exposure. So there's really just a whole lot of ways to get exposure to the crypto space. But of course, as we always recommend, we recommend you just buy and hold, right? We just recommend just buy and hodl. That is the most safest way to be able to continue to acquire Bitcoin. And of course, we also recommend that you really the best thing that I like to recommend to people is, of course, to earn Bitcoin, right? Use do what you love to do, but do it with Bitcoin. Do what you love to do, but accept Bitcoin for it. And we've seen a lot of people come away pretty happy with that. So very interesting stuff on this. Did you want to have any final, do you want to wrap up this particular section of getting exposure to Bitcoin, Gary?
Well, I think there's one thing we can add, which we didn't include on here. We overlooked, and it's actually quite a good way to get exposure to Bitcoin if you're kind of like a traditional investor. You have access to traditional vehicles and don't want to or can't hold your own coin, and that would be through the futures markets. So if you buy the futures contract and you have to roll it, every time it expires. I think it's probably on it's either a monthly or a 3-month contract, which is a little bit annoying, but it's quite nice because there's no actual underlying coin, which is a good thing and a bad thing. The bad thing is, it's a very indirect exposure to Bitcoin. The futures contract's gonna settle to a settlement price derived from these cash exchanges. So there is a chance of that being manipulated or some problem with that settlement procedure. But the nice thing is that there's no cybersecurity risk. The CME and the CBOE are tried and true exchanges. Like, there's not really much risk of them not paying you, or if they get hacked, there's no real damage that can be done. So you're getting this indirect exposure. It's regulated. You have some leverage, and most people can access it through their Interactive Brokers account even, and you don't have to worry about a lot of the issues that come with being exposed to the actual underlying coin. So it's actually a pretty handy way of getting exposure.
Very, very cool. So let me just ask you this, Gary. There's been a lot of talk about these ETFs and things like that, and the financialization of Bitcoin, and some of these larger institutions getting in. There's been questions around custody, right? That's still sort of a big question that's going around. How is that going to be solved? And we've seen some startups come out like Backed, right? That's backed up, or BAKKT, that's from ICE, the Intercontinental Exchange. So we've seen some ideas maybe come put forth. But let me ask you this: have you been keeping up to anything that, for example, that Caden Long has been saying about how possibly the rehypothecation of Bitcoin is going to perhaps give them a little bit more, give Wall Street a little bit more control over Bitcoin than maybe we think that they should? Do you have any comments on that, just real quick? Because personally, I just think that because Bitcoin is on the internet, it's digital. Physical delivery is very possible. I think that you can't have the same type of rehypothecation that you have in, for example, like precious metals and things like that. So maybe you can just quickly give us your comments on that.
Yeah, I haven't followed it too closely, but I would tend to agree with you. Or like, yes, some of these exchanges could push for allowing rehypothecation, which would be like they're lending your coin to somebody else on the exchange, and effectively there's like more coin outstanding on the exchange than backed.
Essentially, fractional reserve basically is another term for it. But sorry, go ahead.
Right, and I think Nick Bhatia says it well that it's kind of the investor's job to push for these exchanges to show, on chain that the coin that they're holding in the custodian, or if they're custodying themselves, is matching the number outstanding on the platform, and they have the power to do that. It's just whether people are going to care and push them to do so.
And that's what's great, is that there's a huge underlying group of hodlers of last resort, right, that are going to quite enjoy, if they try to do any type of run on Bitcoin, right? If they try to do too much fractional reserve, there's going to be it's just going to not end up well for them, because Bitcoin is physical delivery on the internet. Because the physical delivery is so easy, it's going to be kind of funny to see if they try to play any games, because we know that Wall Street will do shenanigans. We know this is what they do. They always try to create more of what actually exists and then sell that idea to somebody, right? So of course there's going to be derivatives on derivatives. The only question is, will they be able to get away with it without getting wrecked? And that's going to be the big question, because of course all the hodlers of last resort don't have to worry, we just got our Trezors and our hardware devices and our cold cards, and everything is nice and merry. So really, really great points, Gary. Thank you so much for that. We do have to, I always try to bring that question up, just to make sure that we stay vigilant, to make sure that everybody is still pushing for exchanges to show us their reserves, for these Wall Street companies to show us their reserves. They probably won't ever, but we at least still have to try to push it, so make people aware of the fact that they need to, even if they currently aren't. So very great points, Gary. Then let's go to Taylor, then maybe to just get a bit of a wrap up on everything that we've talked about. This was, again, the State of Bitcoin Fall 2018 article by Gary Basin and Taylor Pearson. So Taylor, maybe you can just give us a little bit of a recap of everything before we close it out.
Yeah, I was going to add one thing, talking about the regulatory point. There's a report, the Dyer newsletter, DIAR, I'm not sure how to pronounce it. It has some interesting data that came out, I think yesterday, looking at Bitcoin adoption compared to inflation rates in Iran, Turkey, Argentina, and Venezuela. And mostly what it looked like was that Venezuela and Argentina, you did sort of see Bitcoin. This was literally looking at local Bitcoin usage. That usage seemed to be ramping up as inflation went up, but it wasn't the case in Iran and Turkey. And that seems mostly to be the case of Iran and Turkey have taken much more aggressive sort of legal and criminal sanctions against people that are using Bitcoin. So seeing how that all plays out, that at least in the short term, governments certainly have some power to prevent the usage, or prevent, can maintain control over their national currency. So I think that'll be another sort of interesting storyline to follow over the next few years, as you do see different countries go into hyperinflationary regimes, or some other sort of unstable monetary policy. How feasible is it for people in those countries to actually start using Bitcoin without having to worry about some sort of like reprisal or something from the government. But to sort of do the overall wrap up, I looked a little bit at the state of.
Sorry to interrupt you real quick, Taylor. Yeah, that was a great point that you made about that. Because look, what we're going to see around the world, what we're going to continue to see around the world, we're already seeing it, as you just pointed out, Taylor, is that the countries with the worst monetary policy, right, the countries with the most inflation, the countries that have debased their currencies the worst, are going to be the countries with the harshest legislation and regulation towards Bitcoin and crypto. And I think that that's probably a pretty obvious thing, right, to come across. Like that seems to make sense, because but that is in fact what we are seeing. So like you say, Turkey, Venezuela, these countries are hitting crypto the hardest. In fact, Venezuela literally won't let graphic accelerators be shipped into their country. I mean, literally, if you're a gamer in Venezuela, you're pretty screwed. But absolutely good point, Taylor, that these governments still do, of course, have the ability to create these sanctions, to make difficulties for crypto. But of course, crypto being just information is impossible to fully stop, especially when you can just like broadcast the transaction to the to the blockchain with Morse code. It's going to get really crazy with just radio waves, with just radio waves. So really, going to get really, really fun in the future with mesh networks and satellite stuff like that. So very good technology stuff. Okay, so sorry, Taylor, you were saying that you were going to do a bit of a wrap up now. Go ahead.
Sure. Yeah. So I guess big picture on sort of the technology front, Bitcoin is interesting compared to other crypto assets just because it sort of already works as it is. We're seeing sort of increased but still very early stage usage of the Lightning Network. Transaction fees have come down a lot because of both decreased network usage and SegWit adoption, particularly SegWit adoption by the sort of large players, as you mentioned. And then on the regulatory front, Bitcoin is by far the most black and white of, the different crypto assets. It's pretty clear to be regulated as a commodity. You're not taking on a lot of regulatory risk by owning Bitcoin, or institutions that want to get into the crypto market are not taking on much regulatory risk by owning Bitcoin. And it seems like there's reasonable prospects for sort of the increased financializations, products like Etfs coming online in the relatively near future. Excellent points.
The technology front for Bitcoin is looking quite quite beautiful in my opinion, and it looks like this article agrees. I mean, holy smokes, between SegWit, between the amount of hash rate that continues to go on, between the technology that's being worked on in the future, like Schnorr signatures, and then of course Lightning Network, it's just I can't really see the technical fundamentals being ever better than they were today. So great points, Taylor. I think we can go to Gary now. To just maybe do your final summary, or maybe we already did your final sum up. We'll just do a little bit more. Just a quick final sum up, Gary. You have the floor before we close it out.
Yeah, I mean, I think one other thing that we didn't touch on as much is the store of value versus the minimum exchange thing. A lot of the measures that people are looking at to try to value this network is in terms of a minimum exchange. We think like looking at how many transactions are happening or the volume of transactions, and really that might not matter. If we're switching to potentially using Bitcoin as a store of value, then it's kind of like a is it good enough type question that metric that you kind of brought up.
And then layer two, of course, as well. I mean, it's interesting. We don't want to just measure transaction throughput on layer one, but sorry, go ahead.
That's right. Yeah. So more and more transactions will happen on layer two. It'll be harder to track how much is even occurring. And I think to the extent that you see more and more diverse set of participants holding some Bitcoin, obviously you see Wall Street being interested. I think another huge step will be central banks. Maybe you'll start seeing some African or kind of like more distressed South American or Middle Eastern central banks, but take a shot at it, and maybe we'll hold a little bit of Bitcoin, and that'll be another huge step if that happens to becoming like a true international store of value.
Yeah, I do predict that governments are going to start publicly holding Bitcoin by 2024, and probably have already begun privately holding it. At least some countries.
That's right. Yeah, or at least the minister or whatever.
That's right.
So yeah.
Great. All right. Awesome, guys. Well, just thank you so much for joining us. We really appreciate you guys coming on the show. I hope that everybody learned something here. These guys have a lot of great information in this article. I really recommend everybody check it out. The link is, of course, in the show notes. And again, thank you guys so much. You guys did a great job. Really appreciate you coming on the show. Lots and lots of stuff was thrown at you, so maybe you might want to watch the show a couple of times. But we really appreciate you guys joining. Everybody in the chat, we had a great time. Everybody talking. If you guys missed the show live, definitely join us in the comment section. We always like to hear feedback from you guys. And of course, we always have more and more content coming down the line on the CryptoCast Network. This week, though, I will be at the Honey Badger conference, which is in, of course, Latvia, Riga, Latvia. I'll be there September 23rd and 24th. We'll be trying to get some interviews with everybody. I'll be a panelist there as well, but we're going to try to get you guys some coverage from over there as well. So, because I'll be over there, I don't believe I'll be doing a Bitcoin news show, and I don't believe that we're going to have the crypto Q&A this week either. But again, going to try to make up for that by having some content from over there in Riga. So again, guys, thank you so much for joining us. We'll be back again. We try to bring you guys these shows all the time. Perspective, Deciphered, crypto Q&A, Bitcoin news show, Bitcoin Matters. We have a bunch of them, guys. We have a bunch of shows on the network, and really hope you guys are having a good time. We really appreciate you guys listening to us. So until next time, guys, have yourself a good time, and please keep talking Bitcoin. We'll talk to you guys later. Bye-bye.